Good morning. Today is Monday, October the 9th. The time right now is 8:51 in the morning. As you can see, my background is something very different. I'm recording this session outdoor for the first time. And let's do a little bit of a recap. Last Friday, we have a monster blockbusters release for the U.S. employment numbers. We have non-farm payroll actually increased by 336,000 new jobs. Compare that against 170,000 jobs expected. So this was actually more than double what the market expected, and it stunned market participants. And in the initial reaction, equity markets in the States actually dropped before it recovered strongly towards the close of the session on Friday. Then on Saturday, we have news that the Hamas militant group has launched a all-out war against Israel from the air, sea, and land. And basically, this war is the largest operation the Hamas group has actually launched since 56 years ago, on the 50th anniversary of the Yom Kippur War back in 1963. So we can see market has reacted, but so far in the electronic trading session, U.S. equity market has not reacted yet. By the way, today we have U.S. Columbus Day celebration. All markets are open except the bond market, so we still should get some kind of trading activity, although it should be lighter than normal. And this is actually the condition in which we are operating. In the electronic session, we can see equity prices did not quite react very much. Maybe we can see better in the futures contract here. Now, what I'm showing you here is the E-mini Dow Jones, micro E-mini Dow Jones here. You can see that the market actually reacted to the upside before it comes back now with a gap. So we can see prices are reacting negatively in equity markets. So this could be setting the stage for market sentiments going into the rest of the day. That is also true for Asia. Unfortunately, Asia in Tokyo market is closed for a holiday in Japan. So the market is pretty thin as we are speaking. So later on, when Hong Kong opens, we will take a measurement of how the Asian market is reacting. So for now, the Dow Jones itself is basically not doing very, very well, although there was a very robust recovery late on Friday. And going over the S&P 500, we also see that S&P 500 rose to 4,358.5. And this morning, it reacted to the downside with a gap, currently trading at 4,310.25. And upside potential is probably going to be kept around 4,400 points. Over the Nasdaq 100, we also see something very similar. Now, let me refer you to the futures contract here. We have a bit of a pullback, although not by the same degree that we see in the Dow and the S&P 500. Prices has already recovered in a three-wave corrective rally to 15,160.5. In the futures contract right now, is trading at 15,014.5. So we do see a little bit of a pullback in equity markets as far as U.S. equities are concerned. Now, we'll take a look at Hong Kong. Hong Kong has not fully open yet, at least it has not updated. So we do not know what will be the reaction, but I suspect it's going to be to the downside. Last Friday, we see Hang Seng actually rose to 17,750 in the futures contract. So today we should be coming off a little bit if the U.S. equity in the electronic session is anything to go by. Of course, the Nikkei is not updating very well, although in electronic session, it does react to the downside. Last Friday, we saw the Nikkei 225 futures went up to 31,390. And this morning it is trading at 31,090. So we can say that the market has a bit of a drop, about 300 points so far. So you have the sentiment all laid out for you. How the dollar reacts? The dollar did not quite react very, very much. We have a dollar pullback in the dollar index from 107.045 last week within this bracket of resistance area between 106.71 to 107.13. And last week, we can see on Friday, the market actually tested the bottom of the rising channel here. And so far, it has not broken. And this morning, it's trading at 105.955. So this is suggesting that the dollar may actually benefit a little bit from a move to safety. But I think the beneficiary for this move could be actually the Swiss francs in any kind of geopolitical tension. Over in the euro versus the dollar, we can see the euro has actually come up a little bit after the market performed a three-wave rebound into 105.99 on Friday. So right now it's trading at 105.74 thereabout, and it's likely to trade a little bit lower if this is anything to go by. Over in sterling, we can see sterling also pull back from last Friday's high. of 122.61. Currently is trading at 122.24. So again, we do see a little bit of pullback in currencies because the dollar is definitely benefiting from this what you call that sentiment flow. Over in the Aussie dollars, the Aussie actually have a much more marked reaction to the tension in the Middle East. Currently, it is trading at 0.6378 from a high on Friday at 0.64 even. Dollar yen so far has not reacted, but I missed out selling the dollar yen because the market was actually rebounding last Friday at 149.53, and now it is trading at 149.13. And I think the market is technically poised to actually challenge the 147.27 that we saw last week in a flash pullback in this currency pair. In dollar versus Canadian, we see the prices are still pulling back, largely on the reaction of the higher crude oil prices, because Canadian dollars is highly correlated to crude oil prices. As crude oil rises, we can see that the Canadian dollars also rises in reaction. So in terms of dollar Canadian, it has pulled back from 137.85 to the current 136.44 levels. And let's take a look at crude oil. This morning, crude oil reacted violently by rising 4% so far early in the morning. We can see the high traded is about $86.48 and it's currently trading at $86.39. So this is in reaction to the war going on right now between the Palestinians and the Israelis, and it's likely to escalate into something much bigger because this is the largest military operation launched by the Hamas militant group against Israel in an all-out attack from the air, from the sea, from the land. And it was reported that within a period of just 20 minutes, they have fired something like 5,000 missiles into the Israeli territory. Although these are home-made missiles, they are not accurate and it doesn't have guidance systems, but the psychological impact is huge. So we can see that the reason why crude oil prices is reacting in such a way is, of course, the reaction from Iran, which is a major supporter of the Palestine. And if the Israelis, or rather the Iranians, close out the Straits of Hormuz, which is where a very narrow strip of waterway in which most of the oil tanker have to pass through. If they close down that Strait of Hormuz, it is definitely going to cause a huge disruption to supply. So this is how the market is reacting right now, and we want to keep a eye up on these crude oil prices. Top side for now is about $88.80 to $90.27 being the top side for now. But I think this could be the catalyst for a rush beyond $95.03 we have seen so far if this thing lasts for much longer. And over in precious metal, we also see a violent reaction in gold prices. Now, gold actually dipped into this bracket of prices between $1,804.50 to $1,850.70 on Friday, with a low at $1,810.20. This morning, market has jumped $60 so far at $1,852. Thereabout, with a high at $1,855.54. So if you have not already bought, you may have missed the chance to buy. Top side for this move for now is about $1,867.20 to $1,879.80, thereabout. Silver too reacted to the upside. We can see that the silver market actually traded to a low of sorry, this is not gold. So sorry. And this is gold. This is silver. Now, silver actually is currently trading at $21.90 thereabouts. It is approaching the immediate resistance at $22.11 to $22.21 from the last week low of $20.69. So we can see the prices of silver has already reacted and is currently fast approaching the first layer of resistance. We'll have to see basically what it will react, but I suspect it's going to blow through this resistance if the tension in the Middle East continues unabated. And over in digital assets, there's hardly any movements. There is no correlation. And we can see Bitcoin having touched $28,565, dip back to $27,200, and it's currently trading at $27,850 thereabout. No incentive to that whatsoever for the digital asset space. So this is all I have for you for today. In the meantime, take care, and I'll come back to you tomorrow with another update. Bye-bye.